Let's have a look. Preparing. We should be good. All right. So amazing day. Let's get started. We're going to be looking at US 30 and some other pairs of choice, whichever pairs people want to look at today. That's what we're going to go through. We're going to zoom all the way out. So as you can see here, I'm going to delete everything off of my chart. All right. Now my computer's struggling a little piece. I think it's the zoom. I think it's struggling with the zoom. Let me check something, guys. If I close this, will it continue to record? Give me a second. Okay, it does say it's still going live, still recording. It's good. Hopefully it is. Let's close some other windows. I hate when it's so laggy. All right. So, still a little bit laggy. All right. All right. So, what I'm going to do is I'm going to delete everything off of my charts. And we can start again. All right, we'll start again from how we look at these markets from top-down analysis. All right, looking at it from the tip at the top, the people that are funded or trying to get funded. I know I've got some calls, some messages, people actually putting money into a live account. If that is your decision that you want to actually fund your account with live capital, that's fine. Alternatively, like I said to you, we do go the prop firm route. All right, the prop firm route, which allows you to control a certain amount of money. And what I would say to yourself, G-Van, is if you haven't explored that prop firm route, you should go there first because you can have a demo account first, all right? In the prop firm space, all right? But obviously, it's your decision. So have a look here. Have a lookity look. This is the US 30 market, and the very first thing that we do is we zoom out, all right? That's the very first thing that we do is we're going to zoom out so that we can see what's happening in this market. Okay, as you can see, this is a bullish market. We spoke about this. We spoke about the reasons why this market's bullish, etc. All right, and I'm just starting again so that I can, you guys can understand every time you open the charts, not sometimes you open the charts, every time you open the charts, you are going to make sure that you look at the bigger picture. Yeah, and you do top-down analysis. Now, some people just start this top-down analysis at the 4 hour or at the 1 hour, but I like to zoom all the way out and get a real big picture of what has been going on in this market. I really want to know. Okay, so I zoom out and I have a look, and I start connecting some dots like a child. All right, like remember you used to get them books, dot to dot. Okay, so I start connecting some dots because the dots are not my opinions. They are historical facts. Okay, they are historical data points that happened in the market. Okay, they happened. These things actually happened. This happened. That line over there happened. That data point here, the price was this at this date. These are historical data points. Okay, and when I plot those lines, I'm not going to when the market goes up to those lines, I'm going to sell. When the market goes up to the lines, I'm just going to buy it. I'm not just going to hit the button, okay, based upon no information. I am going to. It's a guide. It's a guide for that. Right now, I've drawn some lines in here. Have a look. This range coming from COVID-19 up until today, okay. And I've taken into consideration COVID-19 because it's a data point down here. Whether you like it or you don't like it, something stopped this market from continuing to fall here. People got in this market and said, this is low enough. Started slamming in the data points. And let me tell you why it turned around here. Because look, the previous range, let me show you, this is actually quite interesting, all right? Watch this, I'm gonna use my rewind tool. If I can find, it is, replay. I'm going to go here. And this was prior to COVID-19. Can we remember these times? It seems like it was just the other day, but it was a while ago now. All right. But it does seem like it was just the other day when we was all at home. Yeah. It was the end of the world and we was, buying toilet tissue like crazy. I mean, the reason, I'm going to give you my explanation, a very simple and basic explanation of why the market turned around here. It's because this market, the range that this market was trading within was these two blue lines, okay? It was those two blue lines what the market was trading within. And we understand what about the range. At what point are we interested in buying the range? Does anybody know? Where within the range are we interested in buying?
The bottom.
That's right. Okay. We're at bottom of a range. And why the bottom? If you could just explain what the bottom represents. What does the bottom represent? What does
Obviously,
the bottom
if we're talking about it going back into consolidation, like based off the trend that would be going on, the moment that it touches the bottom, we would be expecting it to reach somewhere near the top of the range again.
No, I'm not giving you that one. That one was all over the place. I want it basic. I want an understanding of the range, of any range, whether it's bullish, bearish, or sideways. What does the top of the range, what does the bottom of the range represent? Simpler than that.
The higher price point and the lower price point. The highest price that it was at.
We're getting there, but I want it cleaner. I want it concise. I want it to make sense. The top of any range represents what?
The last high?
No,
I think I'm going off.
No, you're just overthinking it. The top of any range. Let me touch this down a bit. See, the top of any range, okay, whether the market's going bullish, bearish, or sideways, the top of a range is representing when it's what? Cheap or expensive?
Oh, expensive.
Exactly. Yeah. And nobody wants to buy anything when it's expensive. You know, ultimately what you find is when things are expensive, if I've got a bag of them and the demand is so much that they're expensive, because that's what's dictating the price, isn't it? At the end of the day, you know, when things are in demand, the price goes up. When they're trying to clear all the old Easter eggs off of the shop floor, you go there after Easter and they're all like 10 pence, 20 pence, 30 pence, because there's no demand for them after Easter. All right. So it's supply. So when the demand for something has got to the point where it's so high, normally you find people who's got a box of them are trying to sell them and take profits. So look at this market here. This was the US 30. It was trading up within this range. Yeah. And then it did this. Have a look. Let me play it forwards like this. There's a point when this market gets to an area. Let me speed it up. It's far too slow. Oh no, there you go. There's a point when this market gets to an area where, look, anyone who is interested in this thing, this product, this service, this Easter egg, anybody who was interested in it, I'm guessing now at the bottom of the range would be a great time to buy. You see? And how did I create that range? I just touched some historical data points. Have a look at the historical data points. I just touched them, connect the dots like a child. And from that, I was able to magically say that down here would be a great place for someone to start to buy this market because it's cheap. Unless you believe that product is total nonsense now, that the US 30 is going to disappear off the face of the earth, nobody's interested in it, or Apple's going to disappear off the face of the earth, no one will care about it, or BMW, no one's going to ever buy a BMW again, or Nike. If you see their stock price or the price of that asset or that thing fall to a level that is cheap, this is the point where you want to buy it. So COVID-19 did lick and everything started going way because nobody was out doing nothing, was buying nothing. But at this point in time, the savvy investors were like, whoa, this is cheap as chips. And what happened? Nam. They bought that up. They said, listen, it's cheap as chips down there. They bought it up. Yeah? And if you was down here when you hit the button here for a buy, whether you was buying individual stocks in Apple or Microsoft or Tesla, or whether you was just buying this US 30 indices, you would have done well. You'd have been like, yes, I bought it cheap. Yeah? And since then, the market recovered. COVID-19 disappeared into thin air. Yeah? And the market has continued to do what it's been designed to do, which is make higher highs and higher lows and higher highs and higher lows. Okay? If I just flip that on, speed up a bit. Look, market has continued to do what it's been designed to do, like never before. Look, imagine you bought it down here. Look, you'd have been like, "Whoa, that was a good investment. That was a good buy." I brought all the way down here, sitting on a level of structure over here. You can see this level of structure. And the market came straight down here to the bottom of the range and sat on this level of structure and then went. And right up here, you would be laughing your head off. Okay, that's why COVID-19 turned around in that particular area, because it was at the bottom of the range and it was in an area of structure where savvy investor says, listen, COVID-19, we're going to get over it at some point. So this is a good price to buy it. All right. Now let's have a look at this market right now. We can see that the market is making higher highs and higher lows as it continues to play forward. Okay. And the market, for all purposes, is trading within that yellow range. Yeah, it is trading within that yellow range. It is making higher highs and higher lows. And have a look, we're here now. It's moving extremely slow for some reason. But this is November, all right? This is January, this is February, and this is where we are right about now. The market is making higher highs, higher lows, and higher highs. Now, within that range, the market has not, is now, in my opinion, sitting in the middle of a range. Now, I don't like middles of ranges. I like to sell from the top, buy from the bottom. But this is a huge time frame. This is, every single one of these candles is a month in time. Okay. However, it is still sitting in the middle of that larger Russian doll. Okay. It is still sitting in the middle of that larger Russian doll. Okay. But if we wanted to, we could put some lines around this, which ain't going to be very accurate when I zoom in. But have a look. I'm going to zoom into our daily. And now we can see the market structure on a daily time frame. This market making higher highs and higher lows to the point where I can once again put some lines in between here. And what they based upon historical data points. I must touch the last low before the highest point. So I can touch here, and someone's speaking, so where should I pull the line to? That line to must touch the last point, the last low before the highest point if the market is bullish. Yeah. And opposite if it's bearish. All right. The last high before the lowest point if it was bearish. And then I'm just pulling out a parallel line and touching it on top of the data range. So this is giving me my range. This is giving me the area this market is dancing within. Okay. And we can see here that we're in the middle of this bigger Russian dot in between these two big yellow lines. Let me turn that sound off. That's one of my alerts going, my MT5. Okay. We're in the middle of that range, meaning that this market, this is what it means, could decide to keep going up or it could decide to keep going down, because at the top we're selling. Have a look. Of any range, at the top of that range, we are interested in selling. Why? Because it's expensive. It's a premium. You've got a box of, iPhones, and they've gone up to being £5,000 each. You're gonna be like, look, I'm trying to sell these now before somebody works out of their nonsense and the price starts to drop. Okay. Or down here when they're cheap and you've seen a box of iPhones that someone wants to sell you for 30 quid each, and you're like, listen, I don't know if this guy's bumped his head or not, but I'm going to find my 30 quid as quickly as possible so that I can buy this box of iPhones. But let me tell you something about the middle of the range. The middle of the range is the fact that they're just, I don't know how much are iPhones, what are they, £2 grand, £1,500? I don't really know. Is that you go to the shop and they're just £1,500. And you're just like, yeah, I mean, I'm not in a rush. I don't need one right now. I'm not necessarily in a rush to come and buy these because, I can buy them anytime for that price. Who cares? So in this region here, this market can do either. Someone wants to start taking some profits from a box that they bought cheaper, they might sell. Someone thinks to himself it's gonna go, it's gonna go higher, they may decide to buy. It's that area of equilibrium that I don't necessarily like, but it's still a very, very big range and there is still opportunity for us to take advantage. But that same principle applies on all time frames. So within this blue range now, let's zoom down again. Let's go to our 4 hour. In that 4 hour range, yeah, which is this little range that we've got in here. Within here, we can see the 4 hour structure making some higher highs, making some higher lows. Yeah. Now, ultimately, we can see here for a period of time that this market is going sideways. In here, sideways action. Have a look. How have I identified this sideways action? It's quite simple. if it's not making higher highs and higher lows, or lower highs and lower lows, it's going sideways. It's not brain surgery. It's that simple. The market's not making higher highs and higher lows and 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 higher highs and equal lows, equal highs. Well, that's sideways. That's it. And then from that sideways action, we saw this. Boom, have a look at the candles. Why did we see that big, massive green candle here with strength and speed? Because it had to break through the ceiling. It had to break through the ceiling of that consolidation, and it did it with strength and speed. Smash. And when that happened, all of our eyes went, We looked here like, okay, this is interesting. Boom. This showed us what this market's intentions are. It just kicked in the front door. Someone kicked in your front door, it might mean that they want to come in for some reason. So this is unless they was mucking about, just faking you out, pretending that they wanted to come in, but they didn't really want to come in. Yeah. Playing knockdown ginger. Yeah. Just capturing the liquidity and then running opposite direction. We saw this big, massive push in this direction, showing like it wants to go up, wants to go bullish. Okay. And when it did this big push with strength and speed, it left some concerns and some open doors. We call these imbalances and inefficiencies. Look at this huge one in here. Huge imbalance here that I can identify on the 4-hour time frame here and other time frames also, but for now, that's what we're looking at. This huge imbalance. So even if that market wants to continue going up, it's got some inefficiency first it needs to take care of, which it did. Came back down here, look, close the imbalance. And then from down here, we're trying to see what the market's doing now down here. So we dropped our time frame down again, if you just saw me. I'm on my 1 hour. Once again, if the market is not making higher highs, higher lows, or lower highs and lower lows, the market is going sideways. So if I was to draw a line like this, making sure I touch the last high before the potential lowest point, okay, I want to see what that market's been doing. And if I draw a little, this market, in my opinion, has been trading within this little box here. If this can stop. It's so glitchy. I don't know why it's so glitchy anymore, but I think it's got to do with YouTube recording, to be fair. All right. The market has been in here. Can you see? The market has been in here. Is someone going to tell me that this is bullish? Is somebody going to tell me this is bearish? No, you can't. You can't definitively tell me that. It doesn't look like anything. It's a mess. Came down here, went back up here, came back down here again, broke some little minor structure, came back up here, looked at the top structure again, but didn't break this one, came back all the way down here, actually wicked below here, came back up. Like, it's not doing anything. So therefore, I want to know when it does something. So I'm going to pop an alert above that consolidation area, like so. And I'm going to pop an alert below that wick there. That look, I'm going to take into consideration below that wick. And I'm actually hoping, because the bigger picture is a bullish market, that this was an indication of what it wants to go and do. This is a correction, as we know, and I'm waiting for continuation. I'm actually hoping that the market, goes bullish, but it may go bullish first by doing something like this first, wicking down, capturing some liquidity below the consolidation and tapping into, maybe closer to that blue line, and then go in this direction. I don't know that. That's not something I know, because one thing we know about the market is we don't know what the market actually wants to do. Okay, but my bias is for this market to keep pushing up here. Now, even though that's my bias, if this market starts to show me something different, starts to break structure, starts to break below these levels, price starts to come outside of the market, which is this blue line, and starts coming all outside here, then I'm not going to be still saying I'm buying it and it's going up. I'm going to be reacting to what it does, which looks like it wants to go down, because I do not know when this market decides to do something else. But until it does that, I'm going to, assume it's going to continue doing what it has been doing. Now, I don't want to hit my button now and sit in this market going sideways for 2 weeks. I need to get something that we call confluences. I need to get some sort of confirmation, some sort of, inside information, get the scoop of what this market wants to do. So at the moment, what I'm waiting for, if we could drop our time frame down, we can go to our 15-minute here. You can see that even on our 15-minute time frame, we haven't got no definitive closure. Maybe just about here, maybe. All right, I'm going to check that a little bit better than that. Closure, because I want to see a candle close. I don't want to see just the wick. The wick is just like somebody's just dipping their toe in. I want to see you sit down in the bath and lean back. I want a closure. I want a candle to close to let me know what it wants to do. So at the moment here, from a structural perspective on the 15 minutes time frame, it's not that clean, but maybe we'd say that there's some structure here. So therefore, this little impulse here hasn't quite yet broken that structure. So if there's a closure above this area here, because there is a slight closure here, this green candle did close above this previous little structure over here. I was just trying to check that closely. Yeah, did close above it to the tune of, I don't know, maybe 3 or 4, 5 pips, or maybe a bit more. Let's have a look. To the tune of about 5 pips, closed above it. And therefore, this is a potential little indication. This is potential correction. And I want to see a closure above this wick high for me to say, okay, this market is going up. All right. Now let's have a look at time. Let me look at it on a 50. That's actually, it is a 15-minute closure. So I thought it was on a 5-minute. So therefore, yeah, there's been a 5-minute closure definitely up here. Now on a 5-minute time frame, this market came back down and started to violate some minor structure. So I can't just be out here waiting for a 5-minute close. Okay, I want to see a 15-minute close above here because it's only the 15-minute structure that the market didn't come and hasn't really broken back past. Okay, I don't know if you missed that, if you caught what I just said. So at the moment, it's like this. Look, if I was to draw a line in here from down here to up here, I have to touch the last lows before the highest point. And though the structure is not great in here, but this is potentially a swing low area over here. Now, that structure hasn't been broken yet. So this bullish action, making higher highs and higher lows, higher highs, higher lows. Let me draw it in so you can see what I'm talking about. Making these higher highs, higher lows, higher highs. Even if it comes all the way down here, that structure is still intact. This is still a higher low if the market decides to do this. You see? But it's only a higher low on this 15-minute time frame. On a 5-minute time frame, it's broken some minor 5-minute structure now. So really the only checkpoint that I have at the moment is seeing a nice 15-minute closure above this wick high. Now don't get it twisted. When we get up there and we get that 15-minute closure, I can zoom down and be once again looking for a little 5-minute retracement or correction and a 5-minute continuation to get a smaller zone. But at the moment, the way this is moving, this is where I'd have to put my stop loss on a 15-minute time frame basis. Okay, if that market goes and pushes up there, and I was waiting for this market to break outside of this box because I just spent the first 20 minutes of the session telling you that I want to sell from the top of any range. And I want to buy from the bottom of any range. That's why I'm only interested, have a look. That's why I'm only interested in potentially buying when this market price breaks outside of that area where I was interested in selling from. So you was interested in selling in this area, thinking to yourself, oh yeah, like £150, the maximum that these trainers are going to get to. And then for whatever reason, you've seen the trainers go to 180. And you're like, whoa, wait a minute. Maybe I got this wrong. You've got your box of trainers here and you're thinking to yourself, wait a minute. The price didn't turn around in this red area. It's actually broken past this red area. So you start thinking to yourself, wait a minute, maybe that box of trainers could go to 250. You're not sure. But you're thinking maybe the trainers can go to 250 each. So you're waiting for a confirmation to see if this was just an accident. This was just some lunatic somewhere that was started buying loads of trainers and pushed the price so it pushed past the highest price could be. You're waiting for a confirmation when this market comes and closes back above here and to go, no, it looks like these trainers are going to go more expensive than 150. Looks like they're going to go to 200, 250, 300. And that might make you buy more. You see what I'm saying? When we take it out of it being US 30, ooh, the mystical, what is US 30? Just think about it as, any product. think about it as economics. This is what, kind of drives me every single morning doing this, because yes, we're looking at the markets, but it kind of tunes your brain to think about finance and logically what's going on, and understanding the world, and thinking to yourself about, did you buy something when it's the most expensive it's ever been? Could you have been patient and waited for the price to get down to a cheap level? Are you investing your money in things that have the potential for growth? Because, right here, I'm not going to invest and buy here because there's no potential for growth, because potentially the ceiling is just above where I am. When we broken here, I'm thinking to myself, maybe this isn't the ceiling, and this box of goods can go higher. But I need a confirmation of that. I can't just say, yeah, I'm going to hit here. If this market comes all the way back up here and closes above here, that's a pretty good confirmation that this ceiling, this red block, is null and void. This is why we wait. This is why the break and retest traders, this would break, and the retest traders would have hit straight away at the top of wherever they thought that the quote-unquote resistance was. I don't do that. We don't do that. That's still like you flicking the coin and rolling the dice. You don't know whether or not this was just an accident. This was just some manipulation. This was just, one of the footballers then that just went to one of the shop and bought 1,000 pairs of that trainer that pushed the price up. Nobody wants to pay that money for that trainer. But for whatever reason, this guy who's just sold his business and he's got money hand over fist, he's just like, I don't care that I'm paying the most expensive these trainers are. I want to buy every single one that you've got in the store. And that pushed the price up momentarily. But the average human being is like, this boy just bumped himself. The average human being is like, yeah, I'm not going to buy up there. I'm going to buy those trainers 190 quid. Are you mad? They're 150 all day. This guy's paying 40 quid more than they are. Until he sees the price come back down, like he says, I told you the price is coming back down to 150 quid. And then it stops here and starts going back up. And he goes, wait a minute. Maybe that guy who bought them was onto something. Wait a minute. These trainers are now all the way over here. They're at a price that they haven't been in donkeys. They're 190 quid. And at that point in time, someone might go, you know what? Maybe that's because, I don't know, the football's happening, or there's the basketball tournament, or one of these influencers said this about the trainer. Okay. Yeah, in fact, you know what I'm going to do? I'm going to buy more, because this is looking at this might, that the price of those trainers might actually keep going. You see, when we think about it like that, it's so simple, because it makes sense what I'm saying. It's not no dark arts like we're coming here and we're going to the 618 and 786, we're going to do this, and the 321's going to do that, then we're going to swear we look at the volume profile. It's not all that. Just junical. That's what I like to call it. It's a junical. And when you go to your solicitors and your solicitor's telling you about the contract for the deed to your house, they are talking to you and they are purposely trying to junical. Trying to use words and terms, and if you refer to 1A, section B of this on paragraph 9, the parental, because that's how they protect their job. If they gave it to you in one paragraph about what's going on, you'd be like, this is kind of expensive for one paragraph. Paid you 1,500 quid. But when they keep it complicated, it means that you require them. But I don't want to overcomplicate this thing so that, you've got to learn my specific terms and conditions. I want you to understand market structure, price action, understand finance, understand supply and demand. Because then it will refer and reflect everything that is happening in your life. You'll be like, okay, why has this got so expensive all of a sudden? Okay, when you do your research, the pipeline, the pathway where all the boats were coming from China to bring that good has been blocked. So therefore, there's not a lot of supply of that thing that you want in the UK because you're importing that thing. So if there's not a lot of supply, but there's still the same amount of people that require that thing, well, that's why the prices are going up and up and up and up and up. As soon as they free up that pipeline, prices are supposed to settle, because now there's an influx of that product again, and nobody ain't able to dictate the price that they want to charge for it, because next door, the shop next door's got 10 of them. And then the shop next door to them's got 10 of them. So you can't just be one shop in the high street that's just charging 10 times more or double the amount of what's a price, what a good costs. Because you're just going to go, you're going to walk into a shop, say, yeah, can I have, some of that, please? And they're going to say, yeah, it's X price. And you're like, what? You're gonna go next door and get it for the price that you know you can get it for. Okay, so this is the basics, but a lot of people come to this trading thing and logic, basic understanding, common sense goes out the window. Because if you get to yourself, I'm just gonna make some money. I see my man driving a Ferrari. I see my man wearing a Rolex, and he said he's a trader. Yes, you can make money quickly because there's no cap on the amount of money you can make here. Whereas you can go to work and work your ass off and be the best employee of 2024 with your face on the wall, but there is a cap to the amount of money that guy's going to pay you or that woman's going to pay you. That doesn't exist in the markets, whether that's stocks, forex, futures, options, crypto, whatever it may be. There is no cap. Yeah. But you have to understand that you are the master of your own destiny. You're the one that's manning that boat, and it can also get turbulent and stormy, and you can end up getting wet. You might even drown. Okay, so have a look right here. I'm looking at this market and I am waiting to see what's going to happen now. Are we going to come and close up above here? Okay, or are we going to say, nah, in fact, we're going to keep going backwards and forwards in this yellow box? I mean, why not? It's been going in this yellow box backwards and forwards since, Monday. It's been going backwards and forwards in this box since Monday. So why should I now think to myself straight away that now I've decided to look at the charts, it's going to start doing something else? I need to know. I need confirmation. Hence the reason why I said I've got my alert here. If I right click it, you'll see here's an alert. And my other line, if I wanted to watch, I can place it just below here to see whether the market's going to do something else. And then that's me done. I've got nothing more I can do with this. I have to wait. And I also understand, which is something I've been going over since last week, is the different sessions. The different sessions of a market. What it does in different time frames. Okay? Now, typically we see the Asian session and we gave them labels as sleeping. Last night, this wasn't sleeping. Maybe there was some slow music playing. All right. So it was a little bit more motion was happening last night in this session, the Asian session from 11 o'clock going all the way over in this instance, showing that it goes all the way over to 8 a.m. in the morning. And then we have the next instance, which is the London session, which is this yellow line. And we say that is waking up. When the market starts to wake up, have a look from this yellow, starts to wake up. And then we have this white line is the New York session, and New York overlaps with London. There's people in the dance right now. Everyone's brushing shoulders, bumping into each other, music's playing. It's active, lots of volume. And that's normally where we're awake and things are happening. Okay, so that's always something that you can bear in mind, because like I said to you, I'm teaching you how to trade. I'm giving you the whole fishing rod for you to be able to start seeing these things and having the knowledge. So when you're speaking to somebody and they ask you, what's going on here? Or they say, what times do you like is the best time to trade? Now you know what the best times are to trade, especially US pairs. Because you're going to be able to explain that to them, that Asian session between like 11 and 8. It's kind of like it's sleeping. So I wouldn't really be trading US stocks then. Yeah. And then you're going to go and see another one and you're going to turn around and say, yeah, and New York, London opens around this time and the market does start to move. You can get some moves there. But when it really gets active is in the overlap, where we've got both London open, yeah, once upon a time financial center of the world, and New York open. And all of them traders are all now together, all on the phone, banging away, all hitting the keyboard, all going, all of that volume, all of that buying, all that selling's happening. That's when it's active. You want to get in the market and see it do something, right? You don't want to get in the market in Asian session and it just goes sideways for 7 hours. How are you going to make any money just going up and down, little tiny candles? You're not going to make any money. You're just going to be stressed looking at your phone and be, oh my gosh, I'm up £2. Oh, I'm down £3. I'm up £8. Oh, I'm down £6. You don't want that. You want the market to actually decide, wake up and do something. All right. So like I said, this is my US 30 markup. I'm done. I'm happy with this. When this does something, if it starts breaking down here, I'm gonna be like, okay, cool, no problem. Still in this range. If it pushes up here, which I believe it's gonna do, then I'm gonna wait for my alerts to ring, and I'm gonna either decide to take this trade, placing my stop below this low for 63 pips plus, or we don't know because it depends when that candle closes. Or hopefully on a smaller time frame, we see this market make some nice structure here, maybe on a 5-minute time frame. and give me a lovely indication, correction, continuation that maybe I might be able to turn around and say, instead of going in there, I can get in a bit aggressive like this below that last little retracement over here for substantially less pips. All right. But either way, it doesn't matter because I will be risking the same amount. I'll be risking my same 1%, whether it's going to be, 20 pips or 60 pips. So realistically, if I want to be safer, making this bigger makes more sense. The bigger that this zone is the more room I'm giving it to maneuver, the more room I'm giving for any type of, fundamental news events that might cause a little bit of volatility. Yeah, that might cause some spikes. Now that spike may stop me out if I've got a small little 20 pip zone, but it's very possible, unless it's a really dramatic spike, won't stop me out if I've got a 60 pip zone. And remember, when I lose on that 20 pip zone, I still lose my 1%. It's not as I'm going to lose any less. I went in for higher risk and higher reward. But if I lose on my smaller little entry here, instead of it being here, I'll take some zone like this, I still lose the same amount of money. So this is for you to decide what type of trader are you. Are you an aggressive trader that's what you want to do, placing your stops below here? Or do you want to place your stops above significant lows? Because this here, if we make a higher high here, now this line here, if we make a higher high, I'd have to go and touch the lowest point, which would be here before the highest point. So therefore, this is a significant low below here. This is a swing low within this structure. So my stop would have to be here with my spread times 2. So my spread is 2 pips, which is not in this, but let's imagine it was 2 pips. I'd put this below this level plus 4 pips. Okay, spread times 2. All right, so this would be the safer place. If I go and take an aggressive entry because I've seen a lovely 5-minute indication, correction, continuation here, and it's up here in somewhere, that isn't the safest place. That is the most highly rewarding place. That's the place where I'm going to get the most rewards. Yeah, but it's higher risk. You heard it. Higher risk, high reward. Low risk, low rewards. That's a decision you're going to have to make as a trader. It's a decision that can be dictated also by what time it is. What's the time frame? Because if you're getting to the point where all that volatility and volumes coming in the markets, you may see this market when London and when New York opens and crosses over on London, you might see some volatility happen in this market like this before it decides to go up into space. So therefore, in that instance, if you are still in the trade because you haven't made good money, it's probably better that your stop was down here with your spread times 2, because look, in this instance, you'd have been safe. Yeah. Whereas that other guy who was very aggressive in here, after he saw a little 5-minute structure, he gets stopped out. And furthermore, he gets stopped out, and then he goes, "Oh my gosh, look at it, it went to the moon." Yeah, bro, but you didn't take into consideration the fact of the sessions. Yeah, the sessions that you was getting involved when it was high traffic. So you got run over, bro. Like, you need to understand at a certain time of the day, the traffic's going to die down. But the traffic's going to be a little bit calmer. And in certain times of the day, the traffic's going to be wild. And if you don't take provisions about that wild traffic, you're gonna be surprised. You're going to be annoyed. Oh my gosh, I've been sitting in traffic for ages. It's been mad. It's been crazy. Yeah, bro, because it's rush hour. Are you stupid? If you was to do the same journey at midnight, you'd fly through. There'd be nobody on the road. Okay? So you have to understand these different seasons that happen within the market. All right. So like I said, I've got my alert up here. I've got my alert up here. That was another alert on the same pair, a little bit lower that's ringing. No problem. Right. I'm going to look at something else. Anybody else have another pair that they'd like me to look at and break down? All right. We'll
Crypto, please.
Crypto. Yeah, we got our crypto event, guys. Look, got this crypto event happening tomorrow evening. I would say to share it, guys. Share it with as many people as possible. Share it. Let them come in, let them hear. This is going to be a conversation between myself and the crypto guru, I call him. I call him. He doesn't call himself that. I call him the guru. Okay, and he's going to explain to you some his journey, his story, and things that you can do little websites you can use, points of interest, and it will just be interesting hearing it from somebody who's, you know, really delved into that space, done very well for themselves, and being able to emulate that in the upcoming crypto season. Some people say it's now, some people say it's soon, who knows? And to tell you what the nuances are, what's changed, you know, what to look out for, and it might spark your interest in learning more about cryptos, because you have to understand, you are already head and shoulders of somebody else who's going to come on that call and hasn't been here, hasn't understand about the range, hasn't understood about price action, market structure. Yeah. So you've been able to have an insight into, ultimately, guys, the future. This is what I like to say. Like, all these people out here that are questioning and arguing, oh, crypto is going to do this. Look, it's the future. Whether it's correct right now, whether it's right right now, whether there's problems with it right now, it is the future. It's not going to disappear all of a sudden. The man say, oh, that crypto stuff just disappeared. They threw it in the bin. It's like AI. Man can be like, no, it's never going to take our jobs. It's going to happen. I said, listen, bro, understand it's the future. So are you going to try and get with the future now? Or are you going to try and get with the future later? Because the people that got with the future when the internet turned up, when when the internet turned up, are your Googles, are your Microsofts, are the companies now you're sitting there going, man, these billion-dollar companies, man, I just want to be like them. Because they got with the future from early. Like, once upon a time, people were saying, oh, this MP3, this digital music thing, this ain't going to catch on. Like, all the record companies like, what's going to happen to the industry? The music industry is going to disappear because now people are not buying records anymore, and because of piracy that people are sharing music. Spotify seems to be slapping pretty well. Everybody's got Netflix in their house and 10 other subscriptions to Disney, something else, Prime, something else, and something else. That things evolve. The future happens. And for too long, people from my community, people that look like myself, are behind the future. Oh, no, don't worry about that. That's yeah, I'm not interested in that. Yeah, whatever. And we're still doing the past with a lot of things. There are lots of industries and there are lots of opportunities that the future are going to present. Whether that's going to be in AI, whether that's going to be in cybersecurity, whether that's going to be in cryptocurrencies, whether that's going to be in, you know, emerging materials or emerging practices, or whatever it may be, the future is what we have to be very, very sensitive to, seeing what's going on and being like, okay, this is what's going on. Okay, maybe I could set up a business that does this, taking into consideration the future. All right. Maybe I should put my business online, because if my business is online, this is where everybody is. Me going and having a big high street store shop on the street, that is no longer a flex no more. Once upon a time, it was a flex, and you want to see your uncle who's got a shop on the high street. Like, right, uncle, you got a shop on the high street. Yeah, wow, you're doing bits. Now man's got a shop on the high street. I'm like, yeah, looks a bit expensive, bro. Why don't you just have? Have you got a website? No, I don't have a website. But me have shop on the high street. And I was like, but nobody goes to the high street. I can't remember last time I went to the shop to go and buy that. I'm online. This is the future. So the cryptocurrency conversation is going to be great. We're going to have the conversation. Like I said, it's going to be a convo. And it's going to be a good conversation. All right. So share with your friends. Let them come in. Let them see what's going on. Yeah. Let them understand what's happening. There is a method behind the madness. And guys, I'm going to tell you about I'm going to get exposed to you what our next event is going to be next week, hopefully, or the week after. All right, just not going to confirm. It's going to be about how you guys can get, 90% off your travel. We are all traveling. We all like to go back home, etc. Stay in luxury hotels, get luxury flights. And more importantly, how you can then make money from if somebody else wants to go on holiday. Like, you actually can become a tour operator, qualified, okay, to be able to do that and mash from it, all right? And there's the woman who I'm going to have speaking, young lady, is very influential in the space, done very well as well. And, and just to put it into perspective of what I mean by done very well is, I mean that, She may disclose obviously how much money she makes regularly from booking her own flights and her own things for as a tour operator, etc. But the person who got her into the opportunity makes £1 million a year. Yeah, from the UK. Only been doing it for 4 years, and they make £1 million a year. All right. So this is going to be a great event also that I want you guys to start sharing, etc. And this is all building up, to our launch on the platform, whereby all of this information, all of these events will be, on our platform. All right. So we're here, we're building our mailing list, we're building the interest, we're building the excitement, not just around trading, but around all different areas of personal development. Okay. So please do share. We don't want to just see the same faces, because the same faces, we know we have your loyalty, we have your respect. We want to see new faces. We want to tell your friends and your family and your aunties and your uncles, your nieces and nephews, just to spark their interest in finance or in the future or in cryptos or in setting up their own business, okay? Or in getting involved in a community which is going to empower them and make them think about different things that they don't maybe think about on a daily basis. Now, let's have a quick look at our cryptos. So we're going to look at BTC USD. And when it comes to crypto, guys, it's not just Bitcoin USD that we can look at. We can look at loads of different coins. All right. We can come in here. We can look at Ethereum. Yeah. ETH. I'll tell you what we're going to do. We're going to analyze ETH. All right. Why not? Something completely different. It's Ethereum. All right. So Ethereum, is the main network for, you'd see a coin USDT, which is a stable coin. All right. If you ever heard of USDT, something that tracks the US dollar, that's why they call it a stable coin. Okay. And we're going to look at this market. Now, once again, I'm going to zoom all the way out, as I am a bit distracted, because let me open up another window. Our US 30, as I predicted, looks like it wants to start charging more for those trainers, So let's have a quick look, because the alert's probably going to go off any minute now. Let's have a look. No, we're pushing. Oh, sorry, I'm looking at the wrong page. Look at the wrong page. All right. I'm naturally looking at GU. Was showing me something over there. We're gonna have a quick look at GU. But all that time I thought I was looking at US 30 on my side, my peripheral, while I was looking at GU. We can look at GU in a minute. We'll look at it in a minute. All right, let's go have a look at ETH. Okay. And look, as we zoom all the way out, the basics kick in. Just the basics kick in of, okay, someone goes, you should buy a shed load of ETH. And you're like, okay. You say, okay, let me have a look. That's what you say to somebody now. Whereas once upon a time, you just broke out your Visa card and went onto Coinbase or Crypto.com and started to just buy stuff. Okay. Now you're able to turn and be like, let me have a look first. All right. You're going to have a look and you're going to say, okay, this looks like a good coin, a good coin to buy. It's definitely bullish. It's definitely a bullish coin, making higher highs and higher lows and higher highs and higher lows. Okay. But you want to look and see, where it is that where do you fit into this equation? All right. Now, at the moment, we're in the middle of a range, middle of this bigger blue range. This is where you're getting some of the fear of people turning around and saying, no, crypto's going to crash back down again. I think it's going to come back, because it's in the middle of a range. It's allowed to come back down. It's come back down before from being in the middle of a range. Okay. We're going to draw in some more lines, touching some more data points. These data points that I'm touching are not my opinions. They are factual data points significant in the market, that at this time and this date, this market stopped going down and started pushing up. That is a fact. Okay. So maybe now have a look. Now I've drawn that yellow two data points. I can potentially pull out a top end here and slap it on the top of this highest point. Now, if this pushes higher than this highest point, then I've got to move this because I've got new data. I can't place this line on fictional information. I need to place it based upon data. The data is the top end at the moment here. If it changes, I must change. Okay? So we can see here right now in this Ethereum chart, how the market was pushing up like so. All right. This kind of range like that. If I drop my time frame down to my 4 hours, it's gonna look a bit clearer. Let's do that. I'm gonna make this line a different color because it's not a great color at the moment. Let's click that. Let's make it turquoise. And let's try and make it actually touch some of those data points that we can see here. So it's not drawn very well. I'm sorry that the screen's so glitchy. Everything's taking so long, all right? I'm gonna try and find out why that is. I don't know what it is I've got going. That is just dragging a bit. So we can see like this. And if I was to connect some more dots here, we could connect some dots from potentially from about here, like so. Why is that? It's because I'm touching this last data point here before this highest point here. And we can see how the market came in here. It's ultimately started going a little bit sideways in here. Then we broke outside of that range. If we was to drop down to our hour time frame, our structure. You can see how the market came here and, we're seeing some wick action. All right. But the market broke this structure in here on a smaller time frame. All right. Corrected and continued down here. And it's been pushing down bearish from there. Okay. Now, the issue is this, is if we're talking about this market, it's going to continue doing what it has always done. We're expecting this kind to come down and touch this yellow line at some point. But we're kind of in the middle of the range at the moment. And look what happened at the middle of the range. At the top of the range, this sold off. Selling. At the middle of the range, the market said, you know what? I might start going for a little jog in this direction for a little while. Hence the reason why the middle of the range isn't the most, sexy for me to try and get into a trade. Okay. Now the market's pulling back here, which might just be a correction of this impulse coming down here. Just want to correct a little bit before continuing coming down here. However, I can't just assume that. I have to be able to see it happen. Yeah, I've got to be able to see the market doing that. Get some confirmations. So at the moment, this market was pushing up. All right. In that little range. The question I'm asking myself, if I go to my hour time frame, is has the price broken outside the market? Is it doing anything that's making me think to myself that it doesn't want to continue pushing up at the moment? We're getting some ever so slight, if anything, just breaking out of a little bit of sideways. No, we're just getting some ever so slight lower highs, lower lows. But why is it coming down here? Why might it be coming down here? Let's go and see who's paying attention. Have a look at the chart. Why might this market be just making a very little slow grind, a little slow wind down into this direction? Why? I'm going to give you a clue. Whenever I ask you a question, I'm not asking you to look right because there's nothing. Go on.
Imbalance.
Imbalance, yo. Maybe, I'm not saying it is for fact, but maybe this market is making a slow little wriggle down here because it wants to close up this imbalance. I don't know it for fact because I don't know the future, but I definitely know this imbalance is a concern. It's an inefficiency in the market. So even if this market wants to go up within this blue range, we might see it go down first, sitting on top of this previous structure, closing the imbalance, and then we might see it decide it wants to go and start doing this. All right. So if, for example, somebody said to you, do you want to invest into ETH right now? You could turn and be like, I'll drop my time frame down a little bit more as well. I'm going to stop there. Let's go to a 15-minute. So in this 15-minute, we can see some different kind of structures. Look, making higher highs and higher lows, and it changed here, making lower lows and lower. So if I was to put in some lines, you'd see that the range is kind of like this. All right, tap in here. Let me make that pink. And here. Why? Because if I was to draw a previous line, the line would have been touching some data points, touching this highest point over here. Sorry, touching this lowest point before this highest point over here. And we can see the market is now trading down within this range, making lower lows, lower highs, lower lows. And if I wanted to put smaller lines in here, we'd see this impulse happening here. Look, as the market pushed up Why? Why have I drawn that line like this? Because I had to touch this last low before this highest point. See it? Yeah? And then we've seen the market break outside of that, and now that impulse is pushing down here. So maybe if I was sitting here and someone said, do you want to just invest, not trade, invest in some ETH, I might be thinking to myself, I'll tell you what I'm going to do. I'm going to try and invest when the price gets down to 3,478, to $3,478 and $73. I think that's maybe a decent price to invest in. And even when it gets down there, I'm going to wait to see it breaking some structure maybe. Or maybe I'm just happy with that price and I really believe in ETH, I'm going to invest here. As a trader, I'm waiting for my confluence. I'm waiting to know what this market is doing. Like maybe up here would be a good area to sell at, but maybe it wouldn't because I'm right down at the bottom of this bigger blue range. So do I really want to sell into a thick blue wall? No. So I'm waiting to see when the market gets down here, or if now or whenever it feels like it's going to start breaking its structure bullish, because we're in this the overall Russian doll is in this area of demand of where we're interested in buying. I don't want to sell into this wall. The only time I want to sell is if this guy does this and breaks through this wall and says, well, he's had it, it's had enough, something's going on. Some mad new regulations have come into play and he's bleeding out. And I see this happening. Price actually breaking outside of the blue market, which is the range, and making lower lows and lower highs and closing below it. At that point in time, I'm like, bro, all that buying and investing in ETH, mate, nah, I'm not on it right now, mate. It's going to help. But at the moment, this market is bullish. Yeah, even though it's coming and making a retracement, that overall angle is that blue line. Look, let me zoom out. Yeah, that overall angle is that blue line at the moment here. Yeah, and the overall market is this yellow range. Now this here, what the concern is that if this market is continuing doing what it has always done, this could just be a correction before the market is in this downwards range. Oh, that's long term. Yeah, short term, I need to know what's going on. We're going to be buying up here, but long term, this market might be trying to get back down to this yellow line. Which is why you hear people turn around saying that they think ETH's going to go down to this or Bitcoin's going to go down to that. The best place that I would like to buy, the absolute place where someone says, yeah, invest in ETH, and I look at the chart and I just go, yep, and I whip out my wallet. Oops. When I whip out my wallet, it's going to be, why is it doing that? Stop that. Oh, it's this over. And I whip out my wallet. And I whip out my wallet is when ETH, I look at it and ETH's here, sitting on this line here. Or look, previously when ETH was sitting around here. Yeah, early January, February 2024. Yeah, I'll be like, you know what? Yeah, it looks good, mate. It looks good. And I see it breaking structure, making indication, correction, continuation. See, I can see the point right here on this time frame anyway. I can see the point right here where I would have been like hitting the trigger. Right about here. Maybe about here. Where we've seen the market off of this little, this structure in here, this kind of market was kind of doing the hokey cokey. We've seen the market indicate, correct, continue, boom, would have hit the button. Because I'm down on this yellow line in this area that people want to buy from because it's cheap. And I've seen some confirmations it wants to go up. And I believe in ETH, and I believe in the utility, and I believe in the network, and blah, 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 blah. And it's well established, and, you know, blah, 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 blah. And it's got a huge market cap. And then the market starts to look, run. When it gets up here, it starts to break some structure, indicating here, correcting up into here, continuing down into here. I'll be like, whoa. But when the price actually breaks outside of this range, I'm like, whoa. Might see a little bit of a retracement now. Now, if I'm holding for the long term, who cares? But if I'm trading, I'm out. I don't want to be involved in all of this coming down here and do the hokey cokey. Why? Okay, so right now my concern is that this market is indicated where it wants to go, correcting and maybe continuing down here. But overall, this market is bullish. It is an overall big bullish market, but my concerns were in the middle of the range, and this market could just be indicating, this little pushback here could just be a little correction before it decides to change direction again and come down here. Maybe this impulse just wants to retrace back up 50% of this impulse here. So from here to here, which is ultimately about now. and decide now it wants to turn around and keep going down here. So if we do break out of that blue line that was drawing, and I see it mark price break out of it, and it breaks structure, yeah, indicating where it wants to go, bearish, and then it corrects, and then it continues bearish, I will be in for this sell. Because based upon this bigger market structure, this is part of the bigger picture of it, pushing back down and trying to get to the pong. Remember the ping, the pong, the ping, the pong, trying to get to the pong down to the bottom of the bigger range. But I cannot do that until this happens. Because at the moment, within the smaller Russian doll, it's bullish. It's been making higher highs and higher lows, and with this blue line being its wall. All right. So, what is it? What are you going to do then, Jay? After saying all that, what's your point? What are you going to do? Well, what I'm going to do is I'm going to be placing my alerts, because I can't sit here with my mouth open just watching this, over some structure that is significant for me. So this significant structure would be above this high here on the 50-minute time frame, meaning that it's decided to break up above this structure and do something over here, which may mean that it's touched that bottom of that blue range buy area. All the buy orders have started coming in and it's going bullish again. Or I want to see what happens after this market's come all the way down in here and got near this blue line, which is just a guide. So I can't use it to be millimeter perfect, because it's not millimeter perfect. I just drew it on my screen and my screen's been glitching and dragging, okay? But when it gets down to that level, I'm looking left and I'm looking at structure. Yeah, there's structure in here on the top of this previous little high and this imbalance. So, around about this little level here, let me just put it a little bit higher. I'm going to pop an alert in here if the market's going down there. So when it rings, I'm going to be able to look at it and see that price action and see the market structure breaking. And I might be able to get a tremendous entry somewhere down here. Yeah, maybe even a nice small entry as this market goes and decides to go back up in here. Or alternatively, as I've mentioned, based upon seeing this market push down here, this market starts pushing down here, breaks outside of this blue line and starts to break some structure. So it's not just the blue line, it's structure over here. Let me put a little line underneath it to show you structure. Remember, that's where this market had strength and speed, and where this push started from to even break above this little high. The market comes and breaks down below there and I see indication, correction, and continuation on ETH. Then by all means, sorry, I'm going to be selling and dumping and living daylights out of it. You see, this is about reading and reacting, because it has to be. Unless you're looking at something on a much, much larger time frame, okay? You have to read and react, because you don't know. No one knows the future. Do you understand? Like, is Bitcoin going to go right now to 100K, or is Bitcoin going to go down to 15K? I watched a whole podcast of two experts, one saying it's going down to nothing, another one saying it's going up into space. Nobody knows. They have their opinions, they present their arguments, whatever it may be. But the reality is no one knows. If they did know, I would just be doing that for the last however long. But I can read and react to what the market starts to show me. Yeah? Do you know if your partner's going to be a good partner tomorrow? If they're going to not lie to you and be loyal and be honest. Well, you could hope, you can be wishful. You can have an overall bias based upon the fact that you got married, based upon the fact that you have kids, based upon the fact that you live together. Yeah, I think he should do, or she should do. But you can definitely start making some decisions based upon what they do, their actions. Yeah, you're supposed to be doing X, Y, Z, but you're doing something else. So based upon those actions, I have a different conclusion. I have a different opinion. Guys, any questions real quick before we finish up? Any questions before we finish up? Let me know.
It was a bit of a different one, yeah, bro. Not really to do with the chart. It was to do with that slippage. I don't know if you could just give me an overall kind of thing. I've watched some videos, but I just want to hear your explanation, if that's all right.
So my explanation, breaking down slippage. Very good question. Great question to ask. All right. Slippage is like this, bro. Is you want to buy something at a price, okay? You want to buy something at 3,800 here, this price, okay? Now, if this demand goes through that price so quickly, because I don't know, who's an influencer, I don't know, Kim Kardashian says that she is putting every single penny that she owns into Ethereum. And she puts that and she tweets out, Ethereum is the next best thing. I've had an inside information with the powers that be. and this person and that person told me that ETH is the thing, and I'm putting all of my worth, my net worth, my how many billions she's worth into ETH. All of her followers, her 8 million followers, are gonna be like, oh, I'm gonna buy ETH as well, and it may fly past that price. So when you have wanted to make an order there, and you've hit the button, there's so many people running through the door that they do not get to your order until the price is over here. 3,900. And you're like, whoa, I didn't want to buy at 3,900. I wanted to buy at 3,800. And man go, bro, what am I supposed to do? It was crazy. I had to get in all of these other orders before I got your order in. And all of these other orders took a time, whether it's a millisecond, half a second, whatever it may be. And in that millisecond, half a second, prices moved. Yeah, it's like if you're going on holiday and there's a rate that you're going to convert your money to. And just before you pay your money and execute the rate, well, there's a good broker would lock in the price somehow. But let's imagine something crazy happened. And I'm like, whoa, wait a minute. Sorry, we're going to have to run that again. The rates changed. That's why when you see your mum, my mum would be like, hey, I'm buying the thing from now because the rate's good. She's early. She wants to just go and buy the thing because she doesn't want it to change. So when slippage is just the fact that you apply the brakes. When you apply your brakes and you're traveling at speed, you don't stop straight away. There's some slippage. Yeah. And that can happen in both directions. That can happen when you've got your stop loss in to stop you at a certain price. If something mad happens in the market, it can slip past where you wanted it to stop. So you wanted it to stop at £100, and something mad happened, some crazy news, FOMC news, a speech, election, something crazy happened, and it just dropped, it jumped. It might even have gapped over your stop. I mean, it just jumped. The price went from 3,700 and it just dropped all the way to 3,500. If you had a stop at 3,600, it jumped past you. Now, at that point in time, the exchange is like, oh my gosh, because the exchange just doesn't know the future. The exchange just executes orders. And then after a while, it goes, rah, Jivan had an order at 3,600. Let's close him out. But by that time, you haven't lost $100. You've lost $250 because they're not going to take the hit. You're going to take the hit. Okay. Now, this is rare that you get massive slippage like this, but you can get this type of slippage when there is major news events. It's why people turn around and say that sometimes they stay away from news. Because if for whatever reason something happened and the market just tanked, there is a fear that you might only wanted to lose $100, that you end up losing 1,000 or 2,000 or 200, whatever it may be. It slipped past. If it was calm now and you come into the shop and it's calm, your order just gets dealt with straight away. But when it's mad in the shop, don't think, oh, you can't forget your order, I can't look over you. The shop's mad. You've been sitting there for time and you're just sitting there. She's like, I'm sorry. Can I help you? Have you been seeing? And you're like, yeah, I ordered a beef patty about an hour ago. Oh, my bad. It's been so busy. So many people, so many orders coming in and out. Well, when things were calm, that's not going to happen. So slippage is that fact that when you execute a trade to sell out of a position or to buy out of a position, i.e. your stop losses, that you can be slipped. So it doesn't take you out where you want to be taken out. It takes you out, when the car comes to a halt. You want
that can affect the buying price as well, or the selling price that you want to buy at that point, isn't it?
Both. That's right.
Okay, yeah. And
because you've done
brokers. Sorry.
No, you're sounding very knowledgeable. Go on, keep going.
Yeah, you see brokers, because obviously I'm trying to sign up. It's like, are there specific brokers that will lock in your price, or any broker that can just happen to you if the influx comes in either way?
Look, you want a broker that has a quick ping speed, a ping speed execution speed of how they execute the trades. And normally, if you go and get to a broker, you can ask them, or you can look in the corner of your NT5 and you will see some numbers. All right, you will see some numbers. You see some numbers in the bottom of the corner will show your ping speed. You want it to be as low as possible, because that is just basically how many times the information is updated. If I was updating the information every 30 seconds and then waiting 30 seconds and updating the information, well, a lot can happen in that 30 seconds, right? Do you know what I'm saying? Yeah. So you want to be able to see that information is getting updated like this. And hopefully that their execution as well is very fast to be able to take care of trades. But like I said to you, this is rare. This isn't common that you're going to be getting slippage all the time. If
Okay.
you are getting a slippage all the time from a broker,
Yeah.
leave them. Be like, this broker's crap. Every time I keep placing my stop here.
Is FXCM a reputable one?
Well, FXCM is a reputable. I mean, the best way you can identify reputable pairs is go into your trading view over here, and click whatever it is, and more times out of 10, most of these guys in here. If I go to, let's just go to GBP USD. Most of these guys in here, there's the one you just spoke about, FXCM. Yeah, this is the one I told you could sign up with, IC Markets. Yeah. Most of these guys have been around for a little while. Now, it's the Vantage, again, like, are they necessarily regulated in the UK? No. Are they? Could something happen to them and you lose all your investment because all of a sudden Awanda decides to disappear and, I don't know, swan off to the Cayman Islands? I don't know. I don't know the future. But what I do know is that these have been the guys, the brokers that have been around for a long time. Now, if you're putting a substantial amount of dough into these guys, that you're going to go and put in £200,000 into one of these brokers of your hard-earned money, not money that you've made. You started with a tenner and you grew it to 200,000. You're going to go and reach in your pocket. Now, maybe at that point in time, you want to put your money into a UK regulated broker, whereby with the FCA are going to be able to give you some level of protection, whereby maybe they may protect your money to a certain amount. Do you understand what I'm saying? Or there's some sort of recourse that if that company went bust or did something mad, you could go through the FCA and they're going to, the money's backed by government insurance to a certain amount, not to your full amount, not to your 8 billion that you put in there. Yeah, for example, in your bank account, I think your bank, as in your NatWest, your Santander, your Barclays, your capital is probably insured to 80 grand, I believe, around about that figure. I don't know if it's changed recently. So what does that mean? That means you've got 200 grand in there and something happens to Barclays. They're like, nah, we'll bust you back 80 grand, but I mean, it's not in the paperwork us giving you back 200. Yeah. People don't think that because they just say, well, nothing's going to happen with Barclays. Nothing's going to happen with. But in Greece, if you come back in the day, then banks started falling over. There was queues around the corner for people to try and get their money out of the banks. Yeah, so it's not impossible. So the same way, it's not impossible for your Awandas, your FXMs, your Forex.coms, your IC Markets to disappear. But these are huge companies generating big dough. They haven't gone anywhere in the past. And, based upon that chart, that market is going to continue doing what it has always done until it does something else. All right, so you're safe there. Yeah, regulated UK brokers, obviously you got that UK regulation, but you tend to not have as much leverage with them. Okay, leverage is the multiple by which they multiply your money in the markets to give you more buying power. Okay, so you might get 100x leverage, 50 leverage, 200x, 500x leverage. It just means that you've got more buying power with your same money, but similarly, you can lose that money just as fast. So UK regulated brokers tend to give you less leverage, might even give you just 30 leverage or 50 leverage, whereas you're going to go other regulated brokers, which are 9 out of 10 of them is what Forex brokers are going to use. Your FXMs, your Awandas, your IC Markets, your 8 caps. Okay, so if you're asking about reputable, these are probably them. TradingView probably wouldn't want to just put any guys in here, but near the top of these charts, these are your guys. I wouldn't maybe start scrolling to the bottom of some ones that say that they're in the Russian market or Polish market, but yeah. Okay.
And one more thing before you wrap up. Would you say, like, say for example, I'm signing up to FXCM, yeah?
Mm-hmm.
If I was executing trades on the Awanda server, is that like a bad thing to do? Or does it matter?
What do you mean executing trades?
Like you see when you press the thing and you can see all the pairs and they all have their own little server of the pair.
Yeah. Well, what I would advise is this: wherever your money's at, if you're trading live capital, that's the broker you should be looking at.
Yeah, I thought that.
Okay. And what I would say to yourself is you can actually link your live Awanda account to trading.
Yeah. I realized that. Yeah.
You can do that. I don't know anybody who personally does that. Yeah. Because you're putting in more variables in between your money and you executing a trade. Now you're worried about, the internet. You're worried about, has TradingView done a madness? You're worried about, you've put another variable in. Whereas when you've downloaded your actually desktop application, your MT5, and you put in the information, that's supposed to be communicating directly, not going through TradingView, the website. If TradingView, the website, someone accidentally hit Control or Delete, or their servers actually went down, and you just took a trade, but didn't put in your stop loss, well, you're now confined to TradingView's problems. Yeah, you put another variable in there. So in my opinion, I don't know anybody who trades their actual broker account through TradingView, but you can. How do you do that? You go in here, and on the right hand side, you can see.
I've got an FXCM account, a demo. Well, say demo. I'm not using live money. So I've got an FXCM demo account that I've linked to my TradingView that I've been practicing taking execution like directly from TradingView. You do get a desktop version as well to eliminate the problem that you were just saying, Skeet. I've never tried the desktop version. I've just been using it from TradingView just to see if it's easier, because one of my biggest problems is calculating lot sizes in time for getting into a trade, like open of a candle and things like that. So I thought this might eliminate that. It's helpful, it works, but I'm not saying I'm going to stick with it forever, but it is an option and people can try it. The Oanda one though doesn't work in the UK, or I had an IP address wrong or something like that. The Oanda didn't work, so I had to use FXCM.
There you go. Yeah, so that's live information, and thank you for that. But yeah, you can link these accounts and use them. I mean, what I would say to yourself there, Tam, is that I don't know what time frame you're trading on, okay? But I don't like the answer that it takes me too long for me to calculate my trades, right? I tell you why. For example, yeah, if I'm looking at this market here, this US 30, and what I'm waiting for now is for it to break above, or for it to close above here, for me to place my stop down here. Let's just keep it simple. I'm not going to say the aggressive entry. The market structure hasn't broken this level, so this is it came up here, made a higher high, kind of went sideways in here, made a higher high, it's making a higher low, and I'm gonna indication above, correction, continuation. I want to take this trade here. I'm now waiting for this to close, and I've got all the time in the world to work out what these 64 pips are as a lot size. And to be fair, I'm going to open up my one click on my MT5, all right, my one click, which is going to pull up. Let me just pull up my one. Pull up one, opening my account. Here's one. Okay, let me just do that. Should be able to see here, up here. Okay, US 30 pick. Can you see my screen? Can you see my screen?
Yeah.
So if you go to tools, you go to options. Here on trade, there's one click. All right. When you select this on, like if I do that, it will give me this disclaimer. And I've mentioned it to you a few times. This disclaimer, in a nutshell, if you want to summarize, it says, bro or sis, just let you know that if your cat accidentally walks across your screen, walks across your keyboard, sorry, yeah, and stands on the buy button and executes this trade for 300 lots, we will be executing that trade. And we have no liability for that. Okay. Now that means it brings up this panel here that allows you to go on your cashback Forex or whatever calculator you use, and you can calculate exactly what your lot size is. Okay, that 65 pips, that's going to come down to a lot size of 0.5, and it's ready in there. So when you're waiting for that closure now, whenever that closure happens, you just hit buy. You're in the trade, and then what you do is you have to go and click onto the line where your execution is and drag and place your stop where it's supposed to go. All right, that's how you take a one-click trade. Alternatively, you can open new positions by going into here and clicking new order and doing it the manual way, but this is a slow way. Okay, so I will always teach you to use the one click, but I would teach you some safety measures. Let me do that right now for 2 minutes. A safety measure for me is this: if I'm in a trade, because don't get to, my son's been coming in my room certain time and he's just lent on my fingers and he's clicked the mouse, or he's kind of like certain things happen. When I've taken a trade or I'm not looking to take this trade, watch this. I close that one click. No, I cannot accidentally click it now for 300 lots. Ready, I open it back up, say, yep, I've measured it all out. It's 20 lots when this candle closes above this level here, and I'm waiting, and it closes, and I see the time close, and I'm happy, I get into the trade. All right, so there shouldn't be that excuse that somehow You don't have enough time. I don't know what time frame. If you're looking at seconds and things that happen really, really quick, then maybe. Okay. But
No, do you know what? I think I explained that wrong. Let me start again.
Mm.
I was trying to find, when you've got to find your contract size and it wasn't
yes.
matching up. So I was trying to do some sort of a comparison. So it wasn't that I don't know how to do a lot size before getting into a trade. I was looking at contract sizes. Every time I was calculating it, it wasn't coming out to be the numbers I thought it was going to be.
Let me
So
explain to you an easy way to help you with that also,
yeah,
because
go
it's a
for
very
it,
good
please.
point that you raised. First and foremost, you can come in here in your MT5 and look at the information against your peers. Now, understand this. This is going to be broker specific. Okay, it's broker specific. This is going to change. You're going to be on Owanda, and it's going to say that its contract size is 1. You're going to be in FXCM. It might say the contract size is 10. Now, what I advise, now most people are trading a handful of pairs. You're not trading absolutely everything, exotics and equities and futures, and you're not going nuts. You're trading a handful of pairs, whether it's going to be GU, EJ, US30, NASDAQ, whatever it may be. I would advise if you've come in here, you've gone to your cashback forex to try and work out and you don't know what your contract size is. I would advise. Okay, well, on the forex pairs, you normally have no issues in this calculator. Yeah, it always works it out correctly. Okay, but if you're, say, for example, in the US30, which throws a little spanner in the works, which is about the contract size. Okay, where when you take this, you need to change this to pips. When you hit calculate, for argument's sake, let me imagine you had 100K in here. Whoops, what done? Had 100,000 in here. Okay, and you was looking at your 1% risk. You got to click this calculator, and now it asks for contract size, which can get confusing. I would advise that you first of all start off with 1-to-1 in here, okay, and basically, oh sorry, let me start off the way it opens up the default. No, 1 second. Start off the way it was here, 1-to-1, and you put in your stop loss. It was for 20 pips, okay. And what I'd advise you to do is whatever number this says here is to start off putting the decimal in front of all of it. Take a test drive. Take a little trade. You just opened this account. You don't know nothing about it. This is saying that it's 20 pips zone should be 50. All right, for you to lose 1,000 quid, for that to be your risk. Take a test run and don't put in 50 lots. Just hit the button right now before it gets to the point where you want to, take the trade of 0.5. And when you pull out your stop loss all the way to where it's supposed to be 20 lots away, if this is not saying 1,000 quid, it's actually saying 10 quid, then you know that you need to move your decimal place a couple places to the right, i.e. 50 is correct. Or maybe you might pull it to 20 pips and it's saying, 100 quid. And you're like, okay, so it shouldn't be this. It should be. Oh, sorry, I'm changing the wrong thing. Or it doesn't really matter. It should be that. And now you know for your FXCM what the contract size is on your US30. But just take a test trade. Just say, okay, you're not too sure. You're like, 5 lots. That doesn't look right. No problem. Go into your MT5, put 0.5, hit the button. All your stop loss 20 pips away. Is that 20 pips $1,000? If it's not $1,000, which it shouldn't be because you just added a decimal place onto what you thought it would be, then you can see the difference. You can see how far. If you pull out your stop 20 pips and it only goes to
ratio for each pair, then because I can do a demo, I can do that for US30, fine. Or do I have to go through each pair and do
You're going to have no issues on your forex pairs. Your forex pairs are more than likely.
Yeah,
I haven't come across the issue, but say for example with GBP USD on cashback forex, it's not going to give you the option.
Yeah, to be fair, you're right. It's more indices. I was doing
exactly.
It,
do you understand what I'm saying?
Yeah.
But, so on that basis.
But is it the same ratio for all indices then?
It's not the same ratio.
US30, it's not. So I've got to go through.
Do you know it's best to just say this. It's like cryptos. Let's talk about the crypto scenario, right? I'm going to refer it back to this because we are going to talk about this tomorrow. It's something that I'm dealing with and dealt with. It's like, look, when you get your cryptocurrencies, guys, and right now, I don't know if you're in a place where you've got your own wallets, your own offline wallets, your own online wallets, whatever it may be. But you see, crypto is a peer-to-peer transaction. If something happens when you're sending money, I'm sending money to Tam through Barclays. I can phone Barclays and say, listen, there's a transaction that happened. Can you see it? Oh, yeah, there's a mistake. We're going to sort it. We're going to fix it. In cryptos, it's peer-to-peer. I'm going to send my money to a wallet address. And when that money lands in that wallet address, my money is gone. If I need to send Tam 20 grand to do something, because Tam's fam, you know, she can ask me for 20 grand anytime, I'll send it to her. Yeah. I'm going to first send her $2. I'm going to be like, can I have your wallet address? I'm going to put in wallet address. I'm going to send $2. I'm going to say, did you get that $2? And she's going to say, no. And I'm going to say, can you run your address again? Oh, damn, it was a mistake. Okay. Did you get that $2 now? I did get that $2. Okay, that's your wallet address. And now that's the one I'm going to use to send the rest of the 20K. I'm not just going to send 20K. Because if I send that 20K and I accidentally made a mistake, my cat went on the keyboard and pressed some other digits, whatever it may be, that 20K is gone. There is no recourse. There's nobody you can call. There's no customer services. There's nobody saying, oh, but we'll get that back for you. It's gone. So it's the same when you're trading. If you are not sure, start off at the smallest you can put it at, or put just 0.1 or 0.1 and work it out. Worst case scenario, you're going to lose 40 cents or $2. But start off on the smallest and go, oh, I can see that a 0.1 is this. See, people find these complexities when they jump from gold to trading Bitcoin, to trading indices, because there's different ways that they're working out these lot sizes vastly. Do you understand what I'm saying? One of them, you're going to think to yourself, oh yeah, 1 or 10 is a lot size. So you're going to out 10 of my lot size, 10 of my lot size for me to lose £100 or for me to risk only £100. You take that same mentality, okay, this is another indice. Let me just slap 10 into Bitcoin or 10 into gold. You might even find it just goes and doesn't allow you to take that trade because that 10 lot is far too big for your account size. You're really supposed to be at a 0.1. Do you understand what I'm saying? So I'll just say to you this. I've given you the mathematics of how to go about doing it, looking at your contract size and your MT5. But if you're still in doubt, you know that the smallest lot size you can put on it is a 0.01. Yeah? You're not even going to be allowed to put on a 0.01 unless your lot size is very, very small. So start off 0.01, see what happens. Start off on 0.1, see what happens. Start off on a 1 lot, you're like, oh, that's it there. So therefore, on the indices, if you was to say NAS or whatever it may be, you're going to be like, oh, that's the lot size. That's the contract size, sorry, for NAS. And now you're going to know that. And if you can't keep it in your head, then write it down. Write it down that every time you come to this NAS, or take a screenshot, that it should look like, that it might have to look like this. Or maybe it should look like this, whether it's going to be the contract side. Look, whether you change this one or this one, it's the same result. All right, to be perfectly honest. So maybe it's supposed to look like this. And then just remember that now, because you should only be trading a handful of pairs. You shouldn't be trading a different pair every single day. Now you know that whenever you come in here, it's supposed to say 1 and 10 in here. And now you can now start playing with your risk and say, okay, no problem. I'm only risking half. I only want to risk $500. Or I've got a prop firm account, and even though I've got a 100K account, I'm going to pretend that I've only got 10K because I know that 10K is the amount I'm allowed to lose. So I only want to risk $100 at a time. All right. But I'm just saying to you, test it first. That's my point. Okay, test it first. All right, guys. Good morning. Thank you very much for your time. I'm going to put something on YouTube for us to watch. Something educational, something that may inspire us to do something. Maybe something. Let me see. I'm going to play something trading related. Okay, it says. I haven't watched it. It says, I got funded 2.1 million more in 2 months. All right. Best prop from strategy by millionaire trader and property investor Dan Chong. All right. So that's what we're going to watch. And I'm going to wish you guys have an absolutely fantastic day. For the people that are watching this on YouTube, like, share, subscribe, send to all your homies. All right. Let them understand what's going on over here at Unity to be free. All right.